Okay, guys, so I'm back again. Let's have a look at what's going on. Welcome to all of you that are tuning in right now. So we're going to have a look at the markets and see what's going on here. It's been an interesting one, on the markets, what the price has been doing. Now, as I said to you guys, although I was looking for a short, and I still believe in the short that we have for USDCHF, there was one major issue with the price action, which is as to why, okay, I was explaining to you guys last week that I expect the price to come back here. All right. So without going into too much detail now it depends on what's going to happen here because the FOMC news is coming out very soon. And I do believe that we're going to see some price action here that should push the price very strongly, either strongly long or strongly short. Now, because of the US dollar tapering event that we have going on, it's really, I would say it's really crucial to find out, what exactly we've got going on. So for me, I would say from looking at the structure of price here, I still believe we have a short that needs to reach back down to the 89,645. Now, the anticipation of the bullish side of the market is very high right now, and there is a potential for the price to actually really give us the opposite. But from a technical standpoint anyway, what I am looking for is the return back to this area of demand. Okay, now I gave a trade, if you guys remember from what I was talking about earlier on, there was some price action here to me, which I was not in favor of the price. At first, I was in favor of the return, but looking at the price from the minute time frame and the 5 minute, there were features and structures in the price that hadn't been sorted out in terms of giving us the clearance for a short. So my idea now, and I'm glad that I got all of the students to close. So students, if I told you to close, I'm glad you did. All right. I'm expecting the price to give us a pullback to this area, and then after a short moving forward from here. So in this next couple of minutes, we're going to very clearly see what's going on with the market here. And I'm expecting to see the price return here. Now, the reasoning for why the price is up here, okay, this is my decision for the area. This is the range I'm going for. I expect the price to pull back somewhere within the confines of this region right here. And then we should see the short from there. All right, now the reversal that the price has actually shown us here, okay, I want to state an important point that where the price has actually reversed from is not a very significant area, at least from the weekly time frame, as you would think. All right. Now, on the daily, especially, where this price has actually given us a reversal from is not really anywhere significant of that fact. Now, the reversal point itself is at a specific area, but the reversal we're having here, this is literally the market structure break, and now we're having the retest in my mind. So I'm looking to see the USDCHF pull long and then definitely pull short after. I'm looking for an entry anywhere within this region right here. And then from here, we can actually go for what I believe is going to be the short. So I'm going to post this here and put this out for you guys to see. And we're going to see what happens here with USDCHF. So I'm going to post this quickly to all the students just to make sure that they're all aware. All right. So let's put this here. So just finish off typing this up, guys, and then we can continue. All right. So there is a lot of anticipation. I do think we're going to see something interesting. So I'm going to be doing the rest of the analysis in a moment. All right, let's put the stop losses or stop losses. So this is what I'm looking for, guys, when it comes to the trade. I'm expecting to see some price action here that will give us a very strong run. Let's see what happens here. All right, conservative, almost done. Let's see. All right, so almost done. Let's put this here. Picture one. USDCHF. H1 view. All right, guys. So looking at what we have here, USDCHF, I do expect the price to return here. And if it is, then I'll be loading up again for another short. With silver and gold. Now, gold has returned to a very specific area of supply here, which could mean very strong short. Now, the market structure has changed from bullish to bearish here. Now, even if I was to follow this trend line all the way here, for graphical representation, the price has broken this trend line now. So there is the potential for the short. Now, what I would have liked to see is some of these highs taken, but again, from the H1 perspective here, which is my second trade, we do have a market structure break and then the short side appearing. Now, the question is this going to be a major short that gold is about to do? Because one of the things I don't like to trade during news like this is definitely gold, especially right now with inflation at some of its highest points in history again. I wouldn't want to be touching anything to do with gold because the manipulation is so high. I'd rather wait for the volatility to calm down and catch a continuation move or something, because right now the spiking will be very high on here. So USDCHF is presenting the opportunity for a long, all right? And we have, on the other hand, we have the other set of price, which is the price producing the potential short. Now I'm going to get rid of this arrow here. And I'm watching the price carefully to see what we have going on in this region here. So let me just send a message to the students. This does not mean to take the trade, rather to watch what. Let's see, watch what the price does. Because we have strong tapering. Okay, so I'm going to watch out again. Keep what's from the price action here, the break of market structure again, coming back to you guys all. We have the price returning to this H1 supply area here, which was the crucial supply area for the NFP short. Now the price has come back to this same area. and the market structure has changed from bullish to bearish. We've had a break beneath this last swing here. So now the last swing low has become up. Here is A, here's B, here is the C, and now the price is performing a C to D movement. Now, this is either going to be a crazy C to D movement, as in the price is about to do an untold amount of pips right now, or the price is going to gently return back to demand. Okay, now the anticipation again is very high. Okay, I'm just watching every structure of price carefully. I mean, for me, what I would be doing now, it is quite far away from where the price is right now, is exactly 100 pips, but I'd rather just wait for the price to get somewhere around about here in the next couple of minutes. If it gets there too quickly, then I'll just wait for the price to. Now, one thing about the news is that usually the price provides the entry the day before, and then the news carries on with the move, or the news may provide a spike, which will trigger some sort of reversal, and then the price will go the other way. There's a whole range of things that the price, okay, can do. So for me as a trader, one of the things that I'm always keeping my eyes on primarily is, what is the, I rather just wait for the price. Excuse me, guys. I'm watching to see what the price is going to do, from where we are. All right. So it's 7 o'clock now. Okay. Now the FOMC minutes, because there are minutes, the reaction is not straight away. So usually it's about a 15-minute kind of lull time, roughly around that time, before the price really starts to react. Now, you never know. There might not be a large reaction, because we still have another week until the Federal Reserve actually go to Jackson Hole. Now, Jackson Hole is going to be where they're going to actually declare, what they do when it comes to the tapering. Okay. So Jackson Hole is, if you're not too sure where that is or where it is actually a real place in America. All right. But Jackson Hole, okay, is going to be a place where the Federal Reserve will be speaking. And I'm going to pull up the dates here. I believe the meeting for Jackson Hole is between the 26th to the 28th of, yes, 26th to the 28th of this month. Okay. And this is where the Federal Reserve Bank of Kansas City would proceed to be discussing plans to do with macroeconomic policy, and also to do with the uneven economy and things of that nature. So in that period of time, Jackson Hole is going to be, speaking, and it's probably one of the largest meetings that can happen. Other central banks leaders go there also to discuss certain policies. Now, we can see the prices reacting on gold. We've had a bit of a long happening. So I told you guys, there's always a delay when it comes to the price action here. What I will do is, let's have a look at what's going on. So USD CAD. So at the moment, USD CAD, again, is showing signs of a short, and USD CHF showing weak signs. So you can see that the reaction is not that strong. Okay. If it ever gets too strong, guys, then we will be looking for a short anyway. All right. On the lower time frame structures, for example, this major 30-minute area here, there is quite a strong area of, price action here that could possibly give us a short. So I'm not going to put it past the price. All we want to do is that, because we're on time frames that are, at least the 30-minute and etc., we couldn't really make a final assessment and say, okay, I'm going to go and take a trade right now. Rather, what I like to do with these moments is just to watch. Okay. Now, the FOMC, the reason why I would rather watch is because the FOMC minutes are not data, they're news. Now, it does involve data. There is data pieces that are involved in the speech, but I would say really with this news is more of a written piece of news. And so there is a little bit of a healthy delay that you can actually capture what's going on. Now, we'll go to FX Street, and we'll also go to the open community minutes in a moment to see what they've actually said, because now it's released, we can actually go and see what the FOMC minutes are about. So I'll be pulling that up right now so that we can have a look and see what's going on, and really just see what the speech of the central bank, the world central bank, is saying at the moment. Again, we're in very interesting times. There's never been a threat against currency, even the most well-established currencies like the dollar, for many, many years. Now that we're where we are right now, there is a good chance, that the price may or the years to come, we may see some very strong activity that probably most people will not be expecting. For example, crashes on currencies or mass devaluation of currencies. I do believe that day is coming. It's not here just yet, but I do think that day is coming. And so I'm very poised to see what happens. And I want to make sure that you guys position yourself correctly, as I position myself correctly, to be making sure that we are in the right vein or in the right place when it comes to what's going on with everything that's happening around us. So, USD CAD is now proceeding to bring an entry. It's given a reversal signature, it looks like, from here for us to go for a short. Now, how far the short is going to go, we'll find out in a moment. Okay. Now, for USDCHF, I know the price is pushing quite strongly short right now. And depending on what the price does, I told you guys, you can see exactly how the market behaves. There's a high anticipation for a bullish dollar. So what's the best thing they can do right now? Turn the price the other way. Now, it looks like the price is operating out of this 30-minute zone for now. But again, we can't really do much because, again, if we try to do anything too past where we are, we'll get ourselves in trouble. Okay, USD CAD is also coming closer to the entry point. All right. We need USD CAD to get back into this area here because USD CAD is definitely a long. So I'm going to leave my alarm here. Once the price gets into optimal areas, then I'll be looking for a buy. So I'm going to put an alert here. At the moment, the price is just trying to find its way. And in that time, we can also have a look at what the Federal Reserve Board is saying right here. Yeah, let's have a look and see at the minutes as to what's going on. So I'm going to quickly switch over. Let's have a look here and see. So from what we're seeing here, let's look at the minutes here. Put this up. All right. I think what I'll do is just get the PDF version. All right. So here it's 15 minutes long. Okay. And the first thing would be for them to talk about OMO, because that is the way that's the financial tools. If you ever hear a central bank talking about their tools, okay, or their instruments to control things, they're talking about OMO. Now, really what I want to get down to is just really seeing, let's go back down here. So staff review of economic situation. Okay, here it is. So from what they're saying here, the information available at the time of July 27th to 28th meeting, all right, that we have a US real gross domestic product, or GDP, has increased in the second quarter at a faster pace than the first quarter of the year. And indicators of the labor market conditions were mixed in June, though labor demand remains strong. Okay. And consumer price inflation through May, as measured by the 12-month percentage change in the personal consumer consumption indexes, or expenditure, and price index, has picked up notably, largely reflecting the transitionary factors. Okay, so first things important is that from the assessment, the labor markets look like they are picking up for us to be able to see more income coming into the economy because we have more work going on. The labor markets are larger, getting larger again, and we're seeing an increase in employment. Now, I remember this non-farm payroll is quite notable. The total non-farm payroll employment rose sharply in June, with job gains spread across industries, and especially strong job growth in the leisure and hospitality. Now, it would be leisure and hospitality. If you're not too sure about what happened throughout 2020, in 2020 into this year, what we had when it came to the coronavirus period was a very strong period of time where things like hospitality, anything to do with connecting with people, being very close to people, was completely banned for a very long time. Okay, and this is to stop and prevent, or to at least reduce the spread of the coronavirus, okay, among people. Okay, so seeing that there's a strong job growth here goes in line with, the easing of restrictions, and the easing of restrictions means that the economy is open up, which means more money is flowing into the economy, whether it's within the internal economy or in situ or ex situ from outside, people investing in and etc. Okay, and so hearing these points right here, it seems as though things are opening up and there's more commerce going on. Now, remember, the US dollar is a consumer currency. It's a currency you use to purchase things. In terms of when we look at the financial markets, for example, when we're looking at things like asset purchases, which we're going to look at in a moment, or just buying things in general, sometimes it's called we call the US dollar the petrodollar, but many commodities, okay, especially things like oil, one of the deals that was made by President Nixon is for you to purchase oil, it has to be by dollars. So many foreign countries that hold dollars, one of the biggest reasons they do is to be able to purchase commodities, especially oil, okay, because they're dollar denominated. All right. So that dollar denomination, okay, sometimes, basically if oil falls, the dollar will fall and vice versa. So to a certain degree anyway, because the demand for dollars will always be there. Governments are trying to phase out oil. So if that foundation is broken, we don't have a petrodollar anymore, then what would happen? So there are things in line in history that are, you don't have to be the smartest person to read between the lines. You just have to be well informed. All right. But that's just off the point. So most important thing, now that we're dealing with the FOMC and potential tapering, then we want to be looking more at the asset purchases. So I'm going to look at asset purchases here. I'm just going to make sure that we have all of the rest of our things here. All right, so I'm going to scroll down and make sure that they put it here. Okay, it's all here. So they do have all of the points here. So let's go through the first aspect here. All right, let me come back to asset purchases. Scroll back up quickly as I can. All right, so when it comes to discussion of asset purchases, participants discussed, okay, aspects of the Federal Reserve's asset purchases, including progress made toward the committee's maximum employment and maximum stability goals since the adoption of the asset purchases guidelines in December 2020. They also considered the question of how asset purchases might be adjusted once the economic conditions meet the standards of the guidance, of that guidance from December 2020. Participants agreed that the discussion at this meeting would be helpful background in the committee's future decisions about modifying asset purchases. And no decisions regarding future adjustments to asset purchases were made at this. Okay, was preceded by staff presentations that reviewed the principal channels through which asset purchases exert effects on financial conditions and the economy, with focus on the implications of these channels for the committee's deliberations regarding future adjustments to the Federal Reserve's asset purchases. Now, asset purchases now, open OMO or open market operations is one of the biggest ways that, okay, the Federal Reserve find ways to manage prices, okay, especially in the sectors, for example, with government bonds and treasuries. So if they want to be managing an aspect like that, then we should be looking to see definitely some changes coming soon in that arena in terms of how much asset purchases they do, or if there's a reduction in asset purchases, then that would be one question to be considering. So for me right now, watching what we have going on, I'm watching very carefully to see this aspect here. So this is why, if you're not too sure why I'm going through this aspect, this is why. Okay, so let's go and continue here. So the effect of asset purchases on financial and economic conditions occurred primarily via the influence on the expected path of private sector holdings of longer-term assets. In that framework, larger Federal Reserve holdings of these assets reduced private sector holding, exerting downwards pressures on the term premiums and consequently kept longer term interest rates and overall financial conditions are more accommodative than they would otherwise be. All right, so here we are. This is the line that we've been waiting for. Okay, so in the framework, larger Federal Reserve holdings of these assets reduce private sector holdings, exerting downwards pressures on the premiums. You're noting that down. Now, let me skip over to where we are. Now, staff noted that because plausible alternative approaches to the tapering of asset purchases will likely not lead to significant differences in expected path of the Federal Reserve's balance sheet, these approaches would have similar financial and economic effects in the staff's standard framework. Excuse me. Okay. The presentations highlighted, however, that the alternative tapering, and I'm going to put this here, approaches could have significant economic effects not fully captured in the staff's standard models. In particular, here we go, changes in asset purchases could be interpreted by the public as signaling a shift in the committee's view of economic outlook, which is very true, and on its overall policy strategy, with implications for the expected path of the federal funds rate, okay, or interest rates. Changes in the flow of asset purchases could also influence yields, and this is important. Why? Now, OMO operations are used to stabilize the prices of treasury yields and bond yields, okay? So to do that, the Federal Reserve purchases the government debt, or what we'll call government bonds, okay, for treasury notes. And so in order to manage, okay, the treasury prices, the prices and asset prices in that way, they make usually monthly purchases of a certain amount to keep the price is stable, okay? And if they see, if the economic condition improves or worsens, then they try to manage, you know, based on the asset purchases facilities they have in place, okay? And this is what central bank policy is all about, the ability to control these kind of factors, okay? So from this, maximum employment and price stability goes, all right, this is what they're going for. I'm leaving this right here. And then I'm going to scan back up here and let's talk about this area here. So changes in the flow of asset purchases could also influence yields. Now you know why a bit better, okay? But this influence would likely be modest outside of the periods of stressed financial conditions, okay? It depends on how they do that. In their discussion of considerations related to asset purchases, various participants noted that purchases were an important part of the monetary policy toolkit and a critical aspect of the Federal Reserve's response to economic factors and the effects of the pandemic, supporting smooth financial market functioning and accommodative financial conditions, which aided the flow of credit to houses. So in other words, right here, this term right here is the stimulus package, okay? So because they've printed so much money, okay, and this is important, they printed a lot of money. In 2008, when we had the financial crash, money was generated, there was new money created, okay, but the money was created to and given to larger institutions, okay? So the companies, okay, the big hedge funds and etc. were bailed out by this financial aid, but the public wasn't, okay? So a lot of the money, even though the increase in money or the quantitative easing increase, there isn't much effect seen of this when it comes to the economy as a whole in 2008, okay? Because the supply of that currency wasn't given to the public. So there wasn't a large, broad supply. Okay, so we didn't see that much, we wouldn't see hardly that much, you know, change in the value of the dollar. Compared to now in 2020, the financial crash that we've had, okay, is a very different, even though the financial crash is very much the same, prices are very cheap, things are crashing, lots of uncertainty, lots of fear and etc. In this same period of time that we've had in 2020, although we've had similar conditions, the nature of what caused the crash is completely different. We had something which is almost uncontrollable, which is a virus, okay, the coronavirus or COVID-19. And for that reason, many people were grounded from activity. So the economy was affected in a different way. And in order to aid people, more money had to be printed to supply credit to them so that the economy can still continue and people can still make purchases and etc. So now in this financial crash, because every time there is a crisis, more money is printed as a result of this. But in this case, the printed money didn't only just go to the private sector, but it's gone to the public sector. Okay, so that flow of credit there has definitely inflated the dollar a lot more. Okay, and this tapering conversation is them trying to find a way to balance this out because a lot of money was printed out, okay, for this, and also digital money created. And in businesses, continuing on, and supported recovery. Now, participants discussed a broad range of labor market and inflation indicators. All participants assessed that the economy had made progress toward the committee's maximum employment and price stability goals since the adoption of the guidance of the asset purchases in December. Now, again, remember what we said here. Most participants judged that the committee's, and I'm going to put this here, that the committee's standard of substantial further progress towards the maximum employment goal had not yet been met. At the same time, most participants remarked that this standard had been achieved with respect to the price goal stability goal. All right. So I'm not going to go any further and I'm going to leave you guys to read this. But from what we see here, when it comes to the tapering, there are still more things being discussed. Okay. But from what I can see here, asset purchases are definitely going to be decreased sooner or later. The language being used, I do think that we are going to see a decrease in the asset purchasing, okay, gradually, okay, as things get better, because according to the economic factors and figures that the Federal Reserve has picked up on, it's very clear that we're going to see, and we are seeing a continuance in recovery in the economy. Especially one of the key factors, even though it may not seem that large, but because of the nature of the crisis at hand, which is COVID-19, for the hospitality and healthcare that kind of sector of hospitality and etc., more outgoing activities to really be doing well and seeing a large increase, especially during the NFPs, then that lets you know that there is a lot more recovery than there was 1 year ago. And so the OMO operations that the Federal Reserve will have been committed to doing will have to at one point stop, because they cannot continue doing it forever, because they'll run the dollar to the ground, even though that's probably going to happen anyway. So I hope you guys got a brief understanding of what I put here. Because of the time, I'm not trying to go into deep detail. We'll make a video for that for sure. But for now, let's go back onto the charts and see what's happened. So far, we've seen that gold has had a spike up, but then the price has kind of pushed back down. USDchf has started to retrace and is making its way back up again. And I see that the price has just returned to supply and is making its way up. So we haven't had a drastic reaction. So it'll be okay if the price breaks past this area to start looking for some more sells. And I expect the price to do well moving forward. Now, I like that the reaction isn't so large. It's actually fantastic to see. And I believe the real moves will come along later on. All right. Now, at the moment, we have this large spike here. So we'll see if this spike is filled out by the price and what the price wants to do. But as you can see, guys, the anticipation was so high, even though the US dollar will gain strength over time, but the news is just there to stop people out. I mean, if you try to do a buy stop, sell stop on this, you would have been stopped out. Okay. So this is why you want to always be wise, guys, with how you approach the market. Now, I'm just going to quickly go through the economic calendar. Let's have a look here. All right. This is the only other news that we have for the day. Now into tomorrow, okay, or tonight at 2:30, we have Australian dollar news, which is expected to be negative. And this is for July. And the reason why it would be negative is because Australia has gone into another lockdown. Okay, so there are still pockets of the world that are facing COVID here and there. There are pockets of lockdowns and then reopenings and etc. And we have the unemployment rate. So I would expect the change to be negative because people would have been out of work at home. So I don't expect this figure to be positive. Now, from the structure of price action we've been discussing this week on New Zealand dollar pairs and Australian dollar also, the Australian dollar should be making its way short. So this news should help to push that narrative and cause the price to make that direction down for a short. So I'll be looking out for that if I am awake. All right. So this is 2:30 in the morning again, GMT. All right. Now, tomorrow, again, we have the ADP for the employment change for Canada, which is not high impact, but I still would like to see what's going on here and watch how we use that information along with others to check what we can most likely get when it comes to retail sales. Now, I do expect it to be positive, but we'll see what happens with this news. We don't have any more news really for the week. The major news that we had for this week was the FOMC minutes. All right, I think the real price action movements are going to start to take place afterwards. And from the rest of the week here, I think most of the news here is medium impact. All right, so I'm expecting some good entries for tomorrow and possibly even for tonight. So I would say keep your eyes peeled and we'll catch you guys soon. So everybody take care.